Imagine you lend your friend $1,000 for their new business venture, but instead of expecting them to pay you back in cash, you agree to receive $1,050 after 2 years. That's essentially how bond investing works. You lend money to an entity, such as a government or corporation, and in return, they promise to pay you back with interest. Bonds are a type of investment that offers a fixed return, unlike stocks, which can fluctuate in value. In 2026, the average 10-year U.S. Treasury bond yields around 2.5%, meaning if you invest $1,000, you can expect to receive around $1,025 after 10 years. This might not seem like a lot, but it's a guaranteed return, and the risk is relatively low. Now, let's compare this to stocks. Imagine investing in a company like Amazon, which has historically provided high returns. In 2026, Amazon's stock price is around $2,500 per share. If you invest $1,000,